Bitcoin is on a tear up price-wise, but there are two very important things you need to know about it. Firstly, on the potentially short-term side, the ETFs are on a Bitcoin bender, as put by Eric Balchunas, the senior ETF analyst at Bloomberg. In total, last week, the 11 spot Bitcoin ETFs in the US saw $3.06 billion of net flows. It was one of the best weeks on record, and last Wednesday, BlackRock's iShares Bitcoin Trust saw $643.2 million of inflows alone in a single day. Now, what makes this quite so incredible is something I hinted at in a past video, but that Eric nailed. He wrote, "What's really notable here is just how fast the flows can go from first gear to fifth gear." Remember, in the past few months, we've had weeks and weeks of consecutive outflows from the ETFs. We've had the worst sentiment in crypto for about 2 years and constant cries of a bear market. And then suddenly, the ETFs buy nearly 25,000 BTC in a week. Okay, so firms like BlackRock probably don't buy most of their Bitcoin from exchanges, but rather over-the-counter trades. Although they do use Coinbase Prime, so perhaps some of their Bitcoin is bought like we would. But this is important point number 2 when it comes to Bitcoin's price pumping. Look at the divergence between Bitcoin's price and the supply of BTC on exchanges. The amount of Bitcoin on exchanges is at the lowest level in over 6 years, and this is why many are warning of an imminent supply shock. Fidelity Digital Assets believe the reason for this is public companies buying up Bitcoin, and they also suggested that this is accelerating, not slowing down. Things could be about to get very interesting for Bitcoin.